stock market, and particularly big tech, had a terrible week this week. But all of a sudden, on Friday, August 22nd, in the year of our Lord 2025, things have improved. And why? Because traders have convinced themselves that Jerome Powell is definitely going to cut interest rates in September. Now, did Jerome Powell say he was going to cut interest rates in September in his Jackson Hole meeting this morning? No. Before we talk about what Jerome Powell actually said, let's talk about what has driven stock market growth in the last several months. Traders have been operating under two core assumptions. First, taco, or Trump always chickens out. They just know that any day now, Trump is going to give up on these tariffs. But second is that interest rates will actually decline in 2025. In other words, in order for the stock market to maintain the huge gains that it has seen, those two things need to happen. Now, what did Jerome Powell actually say? As I mentioned in my Two Economies update on Tuesday, there are two main factors that the Fed deals with when they determine interest rates: the job market and inflation. The high rates in the last couple of years have been to combat massive inflation, and we were making huge progress. So in the 2024 Jackson Hole meeting, Jerome Powell stated that he was fairly certain he was going to be lowering rates this year. But then Dear Leader came into office and put all these tariffs in place. Tariffs are inflationary, as we are now starting to really see. Thus, interest rates have stayed stubbornly level. Now, there are signs of a softening job market, mostly that job growth is not happening. But, as Powell noted, the unemployment rate has remained fairly steady. While job growth is not necessarily happening, job cuts, mass layoffs aren't really happening either. So while it's not great, and it's certainly not adding to our GDP, neither is it dragging down the economy per se. What Powell did say is that if the job market concerns start to outweigh the inflationary concerns, then they would obviously start to reverse fiscal policy course. That is a big if, because the inflationary pressures of the tariffs are still very much an unknown, especially because we tacoed 90 days more with China. It's also important to note that in the July Fed meeting, most of the governors, except for the two that are big Trumpers like Michelle Bowman, definitely viewed inflation as the greater threat. Also, what Jerome Powell said that most of the news media is conveniently leaving out is the Fed is adopting a completely new monetary policy to avoid the inflationary issues that happened between 2020 and 2022. Inflation and price stability is going to be the focus, meaning higher rates for longer will become more normalized. My crystal ball broke yesterday, and I cannot tell you if the Fed will or will not cut interest rates in September. What I can tell you is the stock market is acting like it's a sure thing because it has to in order to survive. But it also would not surprise me if the market has extended itself way past the rate cuts that we can expect to see from the Fed anytime in the future. In which case, buckle up. Read past the headline and don't let the stock market Jedi mind trick you. Have a great weekend.